Hello, welcome everybody. It's midweek time. It's the 24th of May. This is a 5-week month, so we had our expirations last week, right? The third Friday, but we got some fun stuff going on that's causing a little bit of turmoil in these markets with the debt ceiling. Let's jump right into it. We're going to share trades as always in this class. You guys know the deal. Take responsibility for the outcome. So all the three majors are moving lower this week. Really good call, I believe, by Darren and Rob last week talking about, hey, we're overextended here. Could this be a blow-off top on the Qs? And he said he thinks it is as well. It could be. It doesn't mean we're going to collapse and fall apart, but the expectations of a corrective move was high, and that's exactly what we're getting. It's a little bit more panic-induced, or not, I shouldn't say panic-induced, but there's... I don't know, when these markets correct, they kind of gap and fall. It's not a slow, steady pullback. I'll show you in the charts here. And it is the debt ceiling worries leading the way. You guys have heard me talk about this quite a bit, and if you coached with me over the last little bit, I mean, we've seen debt ceiling before, many times before. What probably is going to happen is it's going to get to the 0 hour. I remember Congress, and then the House. I remember the meeting over weekends, and I think it went through a holiday once. They actually shut the government down for a week once. But it's always this kick the can. They'll agree to make sure that they raise it enough to at least not default, and then they scream and yell at each other for another couple of weeks. So I'm expecting the same thing to happen. It is interesting to see the markets actually gravitate towards this and really focus on it. One thing that isn't really talked a lot about, and I've got a slide coming up, is the Fed might not be done. I'm seeing some things in some of these economic numbers. That services PMI and the new home sales really kind of shocked me. I'm going to be interested to watch the PCE on Friday. I'll make mention of it again. Along with what the Fed says. We got Fed minutes today, and that might go under the radar because of the focus on this debt ceiling. Okay, past all the blah blah, let's get to the sentiment here. It's definitely bullish in the big tech, neutral to slightly bearish everywhere else. And it's not only in the price action of the charts, but folks, I was digging through a bunch of bulls, and I can't find anything that isn't got some sort of down to it. And some of the bulls that actually have been doing really well have a little bit of a bearish feel to them this week, which is great. They need to pull back. But outside of giants, Meta, Tesla, Microsoft, I'm not seeing a whole lot. Even in some of the bigger communication sector names, they're starting to pull back and roll over a little bit. In fact, we had a really good bear in one of them. I'll see if I can't remember where it was. It's on my list. It's one of these. So it's not everything's participating. So then I kind of scratched my head and felt, or kind of remind myself what Rob said on the weekend class. I feel bearish. I totally feel bearish, but the markets aren't showing any signs of it. So it's hard to not feel bearish when all your scans are showing bear, breakdown, bear, breakdown. It's like, all right. So I did pull a fun chart for today we're going to talk about with the VIX. So once again, in the economic data, we're showing contraction in some of the numbers, which has eased the Fed off a little bit, I believe. But I don't know if he's completely off the table because that service PMI, new home sales, both higher. Some of these corporate earnings were beating. Yeah, they're beating lowered expectations, but they're showing there's still a lot of strength in there that I don't think is being taken care of. So that might leave the Fed to be more active. We'll see how the markets fare. All right, so trade ideas. I put Spotify up there, and the reason being is because it was from last week, and also the reason being is one of the few trades out there that isn't having a 3-day move to the downside, which is fine. But I thought we'd share it. But SLG on the neutral side, awesome pick from last week. Still looking good. And yes, folks, 3-4 weeks ago we had W Wayfair, and it is still neutral. So anybody that is just selling and selling against this, you're doing really well. Good job. Bearish side, Philip Morris, GDX, great gold trade brought to this class last week. Thank you. And then Budweiser. Slipping, or Anheuser-Busch. We'll take a look at these charts one at a time. So let's start with Spotify. What I liked about Spotify was it did pull back, as these markets have, but take a look at today's action. Gap down, and it's kind of climbing back up. It's trying to pin itself to that 150 level, and I do like this. It's got a nice little base up here that it's setting, and it's trying to move up through it. So yes, if you want to be bullish and if you want to stay bullish, and It's in the correct sector. It's in communications. It's just really doing well. It's one of those darling stocks. I like it. And now, if you don't want to be too bullish on this, like we discussed last week, you could play something sideways. And if you did something sideways from last week, you're pretty happy because this is, I believe, where we talked about it. It was on the 17th, somewhere around here, or as it was moving higher. But it's consolidating a little bit of a pullback. If you sold the 155 or the 150 even, you're sitting pretty. I do like it to the bull side moving forward. This is SLG, talking about a sideways move, and I do think we talked about it. I just looked at this, I think, before. It was somewhere in here. And we liked it, saying, hey, it could pin itself right here at that 22 mark. But we did find a range of about 24 all the way down to maybe 21. And boy, look what it did yesterday. Isn't that sweet? Comes up, hits that big gravestone doji. That's what you call it, right? Or is that a gravestone doji? I think it looks like one. Anyways, it's flipping right over, rolling back down towards that 22 mark. So this thing has been sideways for a couple of months now, and it looks like it wants to continue to do so. So awesome trade. Still looks good. Speaking of which, here is Wayfair, consumer cyclical, and it's almost like it's in a buyout rumor. I'm not sure. I haven't checked any news. We talked a little bit about this hiccup as it moved and then whipsawed back. But I didn't think it was going to get that tight again. I was thinking somewhere below the 40 and just above that 35. Do you want to call that? Is that 30? That's a little lower than that, maybe like 34. But it looks like it's just sticking right at those moving averages. And look how consolidated they are. You can see they got tight right through here, and they stayed tight. So a little bit of a hiccup, but if you were able to weather that storm, sideways still works on this. It's really, really nice. It's really nice. Okay. Let's get to, Philip Morris. Philip Morris also on the bear watch. Thought it was going to break down. Had a little bit of a descending triangle pattern going on, and lo and behold, you guys are right. You're right. We talked about it could roll all the way back down to this lower target here at about $90, and it didn't. Or it could slowly bleed towards that 90. I think what we talked about. We wanted to put sideways with either direction, some sort of sideways on our bulls and or our bears, and this just looks really sweet. It's just been sitting comfortably below that 94 since we talked about it last week. Awesome job, folks. GDX on the bear side. Look at that breakdown. Talking about gold and the weakness. And every time I hear about commodities, I tell you how I'm not very good at them. And fortunately, you guys are. Beautiful little double top here. We got the 20 moving below that 50. It slid below that area. I don't know if we targeted this. I don't know. I'll just draw some lines. But just kind of, it might just bleed lower. And boy, look at these last few days. Very nice. Very nicely done. Very good bearish pattern. And still sideways. I still kind of like it here. Expectations for maybe a small bounce. That's great. But comfortably below 33 for now. Yeah. And I think that's what we were talking about it last week. So awesome. I love it when they do exactly what we're kind of thinking they will do. So good job on that. And then the last one is Bud. And I was thinking Bud was looking really good, but then I didn't even notice today's candle. Right? Look at this. All the way down there. So we knew it was falling out of favor. They took a stance on I don't know, something I wouldn't touch with a 10-foot pole, right? But they took a stance on it, and I think it's backfired with some of their campaigning. So, but boy, it's kind of in a free fall here. But it is, we were talking about, hey, if it could sustain a base, sideways to down, and lo and behold, I'll draw it because it's kind of hard to see. This is a little tiny candle here. It's broken down today, gapped below that. So it's kind of in a free fall right now. So awesome. Boy, I hope somebody caught that. So good job. Excellent trades as usual. It's crazy because we're not seeing a whole lot individually. My personal account and some of the trades I'm looking at, they're just nothing's really there. But as a group, we're doing pretty good. So let's take a look at the market performance. This is from Monday, Tuesday, and Wednesday, and it's almost uniform. It's kind of eerie. Dow, the S&P, and the Qs all down about just shy of 2%. Closely shy of 2% altogether. Now, that's a bigger range due to the fact that there are very different price points. And you'll see all of them have this free fall feel to them, which has got me a little panic-induced. But I still have to follow what my chart says, and I still have to follow price action overall. But I've been waiting for this shoe to drop, right? Or this markets to be really tested, and they weren't in January, and they weren't. They almost were the beginning of March there, and I'll show you this on the volatility index. But just this stubborn and monotonous purchase. Well, this might be the first time that we actually get a test, and I've said this before. You guys have heard me say this many times, but we need to see a real hard bear push to see if we can handle this, and it's almost feeling like we're getting that right now. I might be eating my words next week. Who knows? Russell's flat, oil bouncing, and gold flat. I think a lot of it has to do with weakness and fear of what the dollar's going to do and what the Fed's going to do with it all. So let's jump into the charts themselves. Here's the SPY, and it did have a beautiful confirmed breakout. And I have to agree with the consensus on the weekend. This is an absolute breakout. There's no way ifs, ands, or buts around it. It's a beautiful ascending triangle. I would expect some sort of retest or consolidation. However, this is a little bit more substantial than the retest I would expect. Now we are at a level today that is still within line. If we get another one of these candles down to here, we're going to be having to switch things around. We're going to be singing a different tune. Also, it would be correlated with, I would assume, should expect larger volume and a spike in the VIX. But let me erase this. But if we stay here, I mean, we've seen free falls here that just stop and turn, right? A big fall right here, and it just stopped and it turned. Big fall right here, that's the end of it, and gapped up and went flat. So we know these markets have it in it to erase days like this. Here's another one here, right? So we'll have to see if we can stay on this 410 level. If this continues to fall, and I haven't seen this in a while, you guys can take a look at this chart, more than 3 days in a row. I mean, can you imagine if the markets did Monday, Tuesday, Wednesday, Thursday, Friday, and went into a weekend all bear candles? I don't know what would happen that next week, right? It might create that domino effect. Margin calls, panic induced, right? The lemmings running towards the cliff. We'll see. But for now, it's an overextension or a confirmed breakout with a pretty aggressive retest. That's all I can say about that right now. Diamonds, completely different chart. Completely different chart. Just a slow bleed that seems to have now picked up momentum. Now, what I just drew here, folks, is a channel. You guys can do some channel. If you snap the line through the middle of this, it'd give you standard deviations above and below. If you guys have Bollinger Bands, you'll see the same thing. But these are also referred to as flag patterns. They usually happen above the moving averages and flag towards them. This happens to be below. Now, the 20-day and the 50-day are still stacked correctly. However, one is sloping lower, the other one's kind of leveling itself off. We could be in for a pretty significant move to the downside. However, if we get this change in I should say sentiment, and the overall markets come back up to this higher band, have a shallow pullback in the median area, and then move higher, and you Bollinger Band guys know exactly what I'm talking about, then we have a confirmation of a bullish flag pattern and a breakout. That takes weeks. Now, where it's at in the short term, it's absolutely bearish. It's showing complete weakness. It's breaking below support levels. That 330 was a pretty sizable mark for the diamonds. You guys can go all the way back here to the end of or that January, the beginning of this year, excuse me, and see that we're already below that. So it's a very difficult one to gauge. Now let's go to the Qs. This is the blow off top conversation I've had with so many of you. It's kind of a parabolic move out of a high tight base. Let's create this high tight base and then this parabolic move. These were very quiet. And I don't know if you remember me talking about these over the last few weeks or in my end-of-day posts. These candlesticks are moving higher. They don't feel like they are. We'll have a day that's slightly higher, maybe 0.8% or 0.25, a very flat day. But the Qs were putting in slight gains. So these were very quietly moving higher. Now this last surge does feel like a blow off top. I did not see the volume that I'd like to see. Let me take a look at the volume back in some of these days or these areas. But it does have that same, I hate to use the word, feel. Now this move to the downside is to be expected. Rubber band theory. No matter how, the harder you pull a rubber band, it's going to snap back. Doesn't mean we're going to fall apart and the markets are going to go straight down, but it's going to correct fast and hard and probably retrace to a place where it was comfortable. In my eyes, that's right here, just above that 320 mark. Somewhere up in there, I think it has plenty of time to pull back even slightly below that 20-day moving average. And why do I think that? Well, if we're charting, folks, did it here, did it here, did it, well, a little lower there, but it did it here, did it here. That's the 50. But it usually will trace to one of these moving averages and then it's turn itself around. If we start to get lower than that 330 mark, or 325 mark, let's call it, below that 20-day, and we don't hesitate, we start doing kind of what the diamonds are doing with these gap down candles, then I'm thinking a little bit more to come. Okay, I promised we'd talk about the VIX. Here it is. This chart I don't look at very often. In fact, I believe the last time I shared it with you guys was this day right here. I remember it because we had really fallen apart, and that's more of a capitulation. I'm not going to use the word. That appears to me like a blow-off top, just inversed, right? Because it's the volatility index. And when we had this gap, I was absolutely expecting this move. I didn't expect a little bit of a dip there, but I expected this move. And we did get it, but it was short-lived. We saw it before here, and then guess what happened? It corrected, and then absolute panic. Well, we're in that exact same situation. So we have that move here, consolidate a little bit. The next move should be something like that, if all stays equal. Now, for you guys that are having a hard time seeing that, let's go ahead and just kind of draw how this thing kind of channeled itself out and what it does on its odds and ends. So this is a gap up that came back down, and this is another gap up right here. I'll draw the gaps. This is where I shared it from you last time. But this hasn't pulled back as much. Now, taking a look at the markets, you'd think that the VIX should be somewhere down in here, especially over the end of last week. It didn't. So there's a little bit more angst or anxiety, I should say, in these markets than we've seen in the past in this same situation. Could it be the debt ceiling? Yeah. Could it be worries of a slowdown in the economy? Sure, there's all sorts of different things. We're already through earnings, and a lot of companies, they beat, but they all warned. All of them. There's not one company that really didn't make mention of something that they're worried about in the future. Some sort of slowdown, blah, 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 blah. So we'll have to see how that's going to impact things. But my spidey sense is tingling a little bit, and I'm a little bit more defensive. That being said, it's super hard to get out there and throw all your money into I shouldn't say 5 different directions, but some bulls, some bears, and some sideways. It's hard to build a portfolio in this situation. It's a little bit more reluctant to do so. So let's get into some of the economic numbers that I've been looking at or that we've seen. I'll make mention of one that I was interesting because the weekend update, the numbers were showing contraction. Rob went through a few of them, but then I get into Monday and Tuesday, and this services PMI, that's a pretty good move to the upside. New home sales, that's a pretty good move to the upside. So there is, and I knew it would be kind of more in the services than the manufacturing. It's not about stuff anymore. It's about service. It's about let's go out to eat. Let's go on a cruise. Let's go on a trip. Things of that nature. I'm starting to see there's no real slowdown there. But the new home sales was very perplexing, and maybe it's shorter term. It might be. It can be, right? These are a little bit more lagging. So that made me scratch my head, but it could be something that the Fed's looking at, and we'll find out because we do have right here, the FOMC meeting today. I'm not sure if that's going to be, I'm sure it's not ignored, but with all the whole debt ceiling thing going on, this might sneak up on us. This could cause a little bit more volatility than people are thinking if the Fed gets a little bit hawkish again on some of the numbers they're seeing. Now, the big one's going to be here, right here. We'll keep an eye on this for Friday. The other one I'm going to look at is, of course, unemployment. So with all that being said, and what the Fed says on the minutes, we might get a Fed that doesn't go completely hawkish, but they might step away from that dovish approach, meaning we don't want to take the foot off the gas too early, even though we said we would and we'd like to. maybe some of the numbers that they're seeing won't warrant that. Now, that would add a little bit of insult to injury, I believe, in the markets. What do you know? There's my opinion. Speaking of opinion, let's get yours. Let's pull the class here. You guys ready for a poll? Let's see. Where's the poll button? Let's start with a week, and then we'll go from there. Right? Let's close the poll and share it. And there we are, 71% -1 in short term. Makes complete sense. Makes complete sense as we are threatening that 50-day moving average after a pretty good move to the downside after I don't want to call it a false breakout. It's still sustained. It'll be a false breakout if it fails support levels. Big deal that support levels became a big line in the sand. Okay, let's go on the monthly side here. Oh, cool. 100% voted. That means I can close and share. Not too different. 50% -1 for the week, 75% -1. Definitely 29% at a +1, and then 36 at 0. So I would say a lot more bullishness when it comes to, not a lot more, but it's slightly bullish on the monthly outlook versus the weekly outlook. However, 50% of you are still -1. So it's going to be sideways to slightly down on the month, but down for the week. Awesome. Cool. Thanks, guys. And I'm going to share with what you have, and I'm not too far off at all. I'm slightly bullish on the monthly outlook, and I am 0. I am 0 because we are at the 20 moving average. And, well, now we're a little lower than that. But I'm going to call it at. If we turn here today or tomorrow, then this goes back to green, and I'll still stay at 0. If this starts to test this 50-day moving average, this turns to red. This turns to red, or at green, or I should say yellow, and this definitely goes to -1, maybe -1.5. So I'm right at a cusp. Today's going to be the deciding factor when it comes to my outlook moving forward. Now, what's that going to do? Something that I kind of want to do. I've been wanting to put more bears on because I find a lot more bear trades out there. And once again, here's that word. It feels bearish. I don't feel bullish. I'm seeing and feeling bearish, so I'm kind of waiting for an excuse to do so. I'm still going to do a lot more sideways. Everything will be diagonalized or calendared. It'll just be targeted slightly to the bear side. All right, there it is. That's my outlook. Hopefully it kind of matches up with yours. It's not too far off. Thanks for the vote, guys. Let's get into sectors. The sector analysis kind of also agrees with a market correction. What's been the weakest forever? Energy. Bounce. So it's the strongest right now. However, we didn't get a bounce in defensive or materials. And look at what is still hanging in there is communication services and technology. Actually, let me just zoom this in. It's right there in front of us. So this is from Wednesday to Wednesday. And energy just popped its head up to the top, and it's because it's been just getting smeared. And you'll see the basic materials chart also just looks like a bear rally. Communication services and technology still hanging in there, although they are dropping pretty aggressively over the last 3 days, right? So I'm not seeing anything in this that's telling me outside of just an absolute corrective move. It's a pullback. Let's get to these charts. This is energy. You can see here's that huge slope. Finally tried to settle just above, it looks like, that 76 area, 75, whatever you guys want to call it, around the 78. But very quiet, not quietly, but gaps up, goes up, down, doesn't do anything. Gaps, I'll go one at a time. Gaps up, doesn't do anything. Gaps down, goes up and down, doesn't do anything. Gaps up, gaps up. I mean, it's just bouncing around. There's no uniform move to the upside before it rolls over and falls apart. It seems it's reactive. And I'm seeing that in a lot of different charts. And so when these sectors start to react, they are producing a pattern overall, but it's not a tradable pattern, if that makes sense. Let's go to materials here. Materials is just weak, and it stayed weak. We talked about this descending channel. We talked about breaking a floor here It did bounce up, crossover, this 2050 moving average, beautiful crossover breakdown, confirmed 2 days ago, and it's just free falling. Here's your next stop, right around almost where it's at about 75.5, we'll call it. Let's go right out there. But if this free fall continues, we're in for more than just a pullback. Right now, it's just a pullback. It's an aggressive, fast, panic-looking pullback. And that's about all I got. Okay. So speaking of which, I'll stop jabbering and we'll take a look at some of your trades. Debt ceiling is in focus. I don't know if it's going to be as big of an issue as it will end up being. Obviously, we're going to get some sort of resolution. We've seen it. I've seen it. We've seen it before in the past. We'll get to a point to where we agree to make sure we just don't default. Okay, done. Make enough to where, put it out there, don't default, and then they start screaming at each other. And that can go on for months. FOMC minutes might be, oh, I don't care, we're fine, everything's in line. Or, based on some of these numbers, the PCE doesn't come out until after today, or it comes out Friday, so I'm not sure if he'll make mention of it today or not, but that could be a little bit of a hiccup. Maybe it should be a non-event, but it could cause a little bit of a problem. Good or bad, I don't know. I'd say the only thing they could do is if the Fed decides to put the gas back down, then the markets will already, they're already selling off. They might continue lower. However, no mention of it. We just stay flat. Focus on support levels here. It's hard. It feels bearish. It feels something more than just a bull pack, but focus on the support levels. Extension in tech warrants the strongest move lower. Pull that rubber band. It's going to snap back the strongest. Corrective mode for now is sentiment. However, I could see things get a little bit more skittish as things start to tighten. If we start to see true fear creep into people, and I love the reference. Whatever you're absorbed with or you surround yourself by in your day-to-day basis has a direct impact on your outlook. This is your mood. And all it takes is a little bit of worry about your job or a little bit of worry about this, and the other, and some things that you might look a little deeper in and start to tighten up, and it creates these sentiment changes. So it's corrective for now. Economic data, Fed might not be done yet. We'll see. Unemployment claims tomorrow, PCE on Friday. Keep an eye on those two. That's all I'm looking at. Other than that, I'm just going to see what the markets do with those numbers as well. Cool. All right, let's go see what we've done. Oh, the markets have been listening to us. They're just going to drain a little lower, it looks like. Okay. Brett, FOXA. We'll start there. Got to get off of my pen so I can type. June 32.5 put. Range bound, long shares with price target. Oh, wait, IDXX is the next. Sorry. FOXA, 32.50 put. Okay, sure. Fox Corporation. Communication Services. Not doing very well, is it? But beautiful bear rally up to a rollover. I like this a lot. Looks like you're getting confirmation to the downside, too. He's doing a straight 32 put. Super adjustable, super easy to manage, right? Don't have to worry about too much there. Okay, what's our date today? The 24th? Jeez. Cool, I like it. I like it with the target down around the 30 level. 30, 30.25, somewhere around there. Looks good. Thank you. IDXX. This is going to be range bound long the shares, the price target at 485. Be patient on this, and I'm just saying that because we have the momentum to the downside. But IDXX has been pretty strong and pretty stable right at that floor you're talking about, right at the 460. Really solid. I'm a little concerned about just yesterday's candle and that. That's it. However, we know what this does, right? So make sure you give yourself a good day or two. You are doing the shares, that's fine. Just put a tight stop on it. Let's see if you are doing the shares. I think, yeah, long shares. Yeah, okay, sure. Yep. Wait, do you have a price target on this? 45. So right back up to neutral. Okay. Okay. Yep. Keep your stop tight, but revision trade, or I should say range bound, which is a revision inside a range, which is fine. Let me put that down. I'm going to go IDXX sideways, but with an up because you're playing it back within a range. Thanks for that, Brett. Cool. What else we got here? And Qualcomm. Move on to Qualcomm, June 16, June 2nd, 105, 100 diagonal put. Man, oops, I gotta zoom in first. Okay, so you're just going, what is that, 2 weeks apart? Where did I lose you? 16th and the 2nd. Couple of weeks out, couple of weeks apart. Let me move these. Diagonal put spread for the 105, 100. Okay. 105 in the money. Nice slip today, 100. Playing it tight. June 2nd. What's that, 2 weeks? Week and a half. Good. QCOM, put that down on the bear. Excellent. Boy, Brett came with a list. Looks like a couple of you guys came with lists here. Eli Lilly. It's one that's been back and forth with ours, with this class. I had it on the bull watch. I don't know why I didn't share it. Oh, it's just in a pullback. Just a mean pullback to that's 20-day, but it stopped. 435, 425 bull put spread. Whoops, wrong button. Sorry, guys. 425 for bull put spread, credit spread. Okay. Just making sure he's going to say, hey, this thing's going to stay above. See if I can do it just somewhere above this area. Okay, I'm fine with that. LLY. It's difficult. Candlesticks like today, they're hard to trade on, or like yesterday and today. They are definitely hard. And then is this DraftKings, DKNG, a straight call. Another stock that just seems to outdo others. It just seems whatever's being advertised on TV and the hot topic right now seems to be pretty good. Maybe they just need Matt Damon to speak on it. And that'll shake things up. All right, joke. 22 call straight, June 16th. Totally fine. Easy peasy. Nice and clean. In the money here. Moves higher. And then, yeah, you can play your target, whichever you think. Somewhere up and above that 25, maybe the high of this day, or even further. I'll just put it down as a bull. DKNG. Thanks, Brett. Moving on to Felix, RTX. Raytheon. Ooh, yeah, look at this thing. Diagonal put spread, 95.93, June 2nd. Look at that. Just breaks right below, starting to fall. Very nice. Play all sorts of different things on that. I like it. Oh, another sideways. Is this Delta Airlines? It's crazy how some of these sideways have really stayed in. There's a couple I looked at that were older. I had Netflix sideways for a while, but boy, they broke out. Disney was sideways for a while, but it broke out. But the others that we've talked about have stayed within range. This one looks nice. 36, 34, 32. We got a butterfly on this. Okay. 36, 34, 32. Oh, I like it. I like that a lot. Nice. Excellent. I don't think I need to be checking earnings on all these, right? I mean, I guess I could, but we should be on our way out of earnings season. Yeah. Okay. Joe's got one for us here. This is AGCO. Starting to break support this morning on a descending triangle. Need confirmation. You are absolutely right. Look how clean that is. Yeah, it's looking really good. I think you're going to get confirmation. You're getting it so far, right? Well, like, geez, I could do a real wide one like this. Let's steepen it out. But, boy, that's already below that 115 level for this. That looks very nice. AGCO. Heavy construction equipment. Not doing well. Another trade I know a few of you are in was John Deere. And way to suffer through this weird bounce, but those of you that did, very good. There's just no really, this had no interest, but Friday caused a little bit of a panic, didn't it? Little gap up, comes back down. I think it was its earnings. Yeah, it was. But isn't that great? I mean, the amount of people wanting to just get out of it just shows you that this is out of favor. But same with AGCO, is that what it was? Oops. Looks great. Look at that, bleeding lower. Its earnings are past. Yeah, it's where you find it, right? Toll Brothers. Yeah, bullish. Wonder why? Well, it's a residential construction, and I just saw uptick in new home purchases. So regardless if people aren't getting loans, they're still buying houses. Got to put your money somewhere, I guess. But that's an absolute confirming bull pullback. Let's write it down. Thanks, Felix. All right. Other Joe. We've got a lot of Joes in this class. CF to fall off the table. 62 bear call spread. Let's take a look at it. He's looking for it to fall off. Another agricultural company struggling as of late. Got ourselves a little bit of a bearish engulfing candle going on here. I like that. Bear put spread, he said, instead of bear call. Doesn't matter to me. Either one. The bear something. Looks good. Let's see. CF. Okay. John. Is that steel? I haven't looked at steel for a while. Okay. Yeah, geez Louise. I don't know, folks. Just not seeing a whole lot of belief in agriculture and industry right now. They're just not participating. We're looking at a June 6, 2220 bear put spread. 2220 right in the middle. Absolutely. I love it. Let's put that down. Then you had another one here on W. Let's see what trade you put on there. Call butterfly. Okay, cool. So for you guys that have yet to get into W, here is an example that John has. He's the 16th of June, so about 2.5 weeks out. 30, 35, 40. Let's draw some lines here. 30, 35, 40. That's wonderful. That's awesome. It's great. It's great. You know what? I'm going to carry it forward. Let's keep an eye on this. Let's see how bad we can beat on Wayfair and see how long we can keep this going sideways. It's a great trade. Excellent stuff, folks. All right, so let's type these up. I'll cut you loose. Keep an ear out for the minutes. Don't watch them or anything. I'm just keep an eye out and see if what was said or what was done, and see if the market all of a sudden starts to spike or climb or fall. Chances are it's probably because of that. We'll see. Where did I get? 2 seconds here, folks. Sorry. There we go. Neutral. We had a couple. Well, actually, IDXX was more of an up, but I'm going to put it in the neutral because it's sideways up. It's more of a retracement back into a sideways kind of a range, back into a range. So it is a bull move that we're looking at in this one. It's just back into a range of overall sideways. Let's see, FOXA, Qualcomm. Once again, I'm finding more bears out there. It looks like you guys are as well. AGCO. And steel. Great. Good list, folks. Thanks. Let's do this. Let's get my slideshow from the current slide, and we'll share it. I'll cut you loose. So this is actually a move to the upside, just to be in all fairness, folks. But it is back up into a range, which might be kind of cool because let's say you don't get it until it gets back up on that range. It might be something you want to toy with when it comes to maybe a butterfly or a condor, if it's going to continue to churn sideways. Now, these markets are going to be a little reactionary. I think this week's move shows a little bit of uneasy, but it's not really falling apart. We could get this and then another move up next week and then another fall. This could go for a while. If it's going to react to the debt ceiling and they keep kicking the can down the road, you guys have to remember they could kick this can down for months if they want to. They just agree to not default, print the money they need. Agree to not default, print the money they need. Or it becomes, oh, that's it, we're done, and it becomes a flush out. Keep an eye on the volatility index. Let's make sure that the support levels on these things indeed fall if that spikes. Still waiting for that true bear test. Haven't seen it at all in 2023. All right, guys. Thanks so much. Appreciate it. Thanks for sharing, and we'll talk to you next time. Bye, everybody.